Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be looking at the main theme of the video being that there is a pi cycle signal that's never been wrong and is now giving us this particular signal. And this is not the signal that we get with the cross of the pi cycle at the top of the bull market. This is something that's telling us what may well happen in the very short term, which may well be triggering off the big move that we've been expecting for the next leg of the final phase of the bull market for this 4-year cycle. So what is it? We'll also be having a look at what's exactly driving the markets from the news perspective, as well as looking at the dollar and the wider markets, and finally having a look at the 60-day cycle to show us exactly what's happening in the short term and where the Bitcoin price may well be heading. So if that sounds interesting, you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. And I'm going to go straight into the main theme of the video, which is looking at the particular signal that the pi cycle is giving just now based on what's happened in the previous 3 cycles, which may well be giving us a very strong guidance as to what is about to happen. Well, firstly, we've got to put the pi cycle on and go cycle by cycle to tell us exactly what's happened in the past. Okay, I'm going to take you to the daily chart and look at the first cycle for Bitcoin. This is the first 4-year cycle, which culminated in the top at the end of 2013 here. And what I want you to have a look at is that when we crossed the previous all-time high, and in this cycle we had 2 major all-time highs before we actually culminated in the final top at the end of the bull market. So this was the first all-time high, and we put a white line across there. And once the pi cycle, which is the green and the red lines, and for those looking for the settings, the long moving average, which is the red line, is the 350 simple moving average, and the green line, the faster moving average, is the 111 simple moving average. And this is the style that I've got. So we're not talking about the crosses now, which we've been talking about for many years. What we're talking about here is that when the pi cycle moves above the previous all-time high, this white line here, you can see that the price action doesn't actually protrude the green line until it's had another top. And this is an odd cycle because in this cycle, as I said, we had 2 major peaks before the final peak. So before it peaked, it never actually protruded the green line. So if we put another white line here as our previous all-time high, once again, after the price starts moving up, the price action doesn't come back below the green line until it's actually topped out, which is over here. So this is the kind of pattern, once you pick it up, you can apply it to all the cycles and to see whether it fits. And that allows you to deduce enough information to give us some guidance as to what may happen in the future. So if we move to the second cycle, which ended at the end of 2017, once we got past that all-time high in the previous cycle here, you can see that as the price rises, we only come back to find support on the green line once here, twice, and nearly a third time here, but at no time does the price action fall below the green line until it gets right at the top, and then we get into the bear market. And if we move on to the third cycle, which culminated in the top in November 2021, and obviously we had 2 tops here, the first one being in April here. So once we got past that December 2017 top, and we see what's happened to the green line, until we got to the top, at no point did the price action go below the green line until it had already topped out. So for the second top, similar thing happened. Once we captured the green line, what we did was to find a support on the green line, but it didn't actually go below that. And then we had the actual top at 69,000. So the green line was providing a support until we got to the top of the bull market. And if we move on to the current cycle, you can see exactly why I'm covering this today. And that is because so far in the first 3 cycles, the same pattern has actually played out. And the question is, will it now play out in the current cycle? Because what we've got now is a price action that's come back and is currently finding support right on the green line. So just to take you through that story, this was a previous all-time high at 69,000. So we've gone above that white line of that top. So far, the price action and the green line of the pi cycle is playing out exactly what it's done in the previous 3 cycles. The price has gone above here and come back and found support on the green line. Now that doesn't mean that this is a guarantee that it won't do this. Of course, there are no guarantees. We're in the realm of probabilities and possibilities, never guarantees or certainties. And all we can do is to read the charts, to elicit as much information as we possibly can and give us some guidance, some clue some direction in terms of where this price is likely to go in the future. And of course, nobody knows the future, but the charts are always giving us a lot of clues and signals, and it's our job to pick them up and see what the likely outcomes and results are going to be. So this is what I see at the moment, and the reason why this is important is because when you look at the 60-day cycle, that's giving the impression that it's going to break through the green line. So something has to give, and we'll have to just wait and see exactly which one is going to play out. Is it going to be the 60-day cycle, which I'll go through a little bit later, or is it going to be the green line of the pi cycle? And since the green line has been playing out since the inception of Bitcoin 14-15 years ago, that I would suggest on balance that this is more likely to play out, i.e. a bounce from the green line rather than the 60-day cycle, which is a shorter term time frame, analysis. And of course, we'll keep an eye on this in the coming weeks to see exactly what's happened. And if we look closely exactly where it is now, the current price as I'm doing this video is at 96,100, and the support green line at the moment is at 94,700. And so far the price action, as you can see, has actually respected it twice. Once here when it came down to as low as 91,500, and then just recently a few days ago at 94,100. So this can still come down to as low as 94,600 without breaking that 15-year pattern. And if we move on to what's happening in the news that may well be driving the markets, we've got 12 states in the United States holding a total of $330 million stake in Michael Saylor's MicroStrategy, which has now been renamed as just Strategy. So in essence, what you've really got is 12 states in the United States already holding Bitcoin in the form of Michael Saylor's MicroStrategy company, who are a proxy for Bitcoin. And there are also reports that we may well get to 102,000 Bitcoin price because of the short squeeze. A lot of the leverage players who are putting a lot of pressure on the shorts for Bitcoin, when the stop losses are taken out, that would cause the short squeeze, and that could well lead to a price target, according to this article, of 102,000. And for those of you who are interested in the targets for the end of the bull market price for Bitcoin, there's lots of people making a lot of targets out there, and I just want to bring your attention to this particular one because this is based on the technical analysis in terms of a particular pattern that's been developing with Bitcoin, and that is the Bitcoin's giant megaphone pattern, which is suggesting a price target around about 270 to 300,000. And what is this megaphone pattern? Here it is down here. So this is where it started back in April 2021 when we had the first top of the last cycle. And then the second top became the second point, which is at 69,000. And what they've done is they've taken that line through those 2 points and then taken the bottom line as supports over here, which is the dip between the two highs, and then the lower points in the bear market. And since then, what we've got is a rising market to the point which has broken the upper trend line here. We've had that breakout, and this megaphone pattern has a certain target which takes it to around about the 270 to 300,000 according to this article. So let's see if it plays out. But for those of you who are always looking for targets, this is another one based on a certain pattern that's developed with the Bitcoin price over the last 4 years. And as I've presented many times, that the top can be anywhere really between 150 to 500,000. And we've just got to keep an open, fluid and flexible approach to it. And if we move on to the leverage plays on the liquidation heat map, these are where the stops are, at 98,000 on the top end and 95,000 at the bottom end. So this would suggest that the green line of the pi cycle is very much intact and that we should find some bounce from the 95,000 going forward. And we always want to have a look at what's happening with the Bitcoin ETFs. And currently, on the asset inflows and outflows, we're getting a mixed picture of the red and the green numbers here. And this really reflects the indecision that the Bitcoin price has had over the last 2 weeks. And if we move on to the dollar, which will always play a part in how well the wider markets will do, we've had this strong resistance point here, which we protruded and came back and found that as a support. But as mentioned over the last couple of weeks, we are expecting this to come back down, which gives the wider markets the flexibility to run into a top of the bull market towards the end of this year. And if we have a look at the daily time frame, you can see quite clearly that we seem to have topped out with this gravestone doji candle. And as mentioned in the previous videos, what we've got here is a series of bearish divergences on the RSI. So as the price has been moving higher, the RSI has been making lower highs down here. So it seemed like only a matter of time before this started to move to the downside. And this is what I would expect in the coming weeks and months for this to continue to the downside. And if we move on to the 60-day cycle for the SPX, you'll know from last week's video that we were waiting for the start of the new cycle, and once we got this bounce here, our expectation was for SPX to move above the 6,100, which it has duly done here as we run into the first half of this 60-day cycle, which started here on the 3rd of February. So this should have more room to go into the 60-day cycle before we expect some sort of a pullback and the start of the second half of the 60-day cycle. So this is all looking very bullish, and we should always zoom out and have a look at exactly what's been happening over the last few years to give us the overall trend. And while the trend is going on, there's no reason to jump off the SPX train. So this is where the bull market started at the end of 2022, and you can see quite clearly with the trend line that if you put this through the actual trend, you can see quite clearly we're still in a rising market, and there doesn't seem to be any reason why you would go against this trend. Okay, moving on to gold, and we highlighted this particular bearish divergence where gold's been making the higher highs on the price. And if we move on to the 60-day cycle for Bitcoin, this gives us a very interesting picture at the moment. And I'm going to put on the green line of the Pi cycle and try and relate it to the current 60-day cycle. And currently we're on day 49 of the current cycle, and we're due to come to the end of this current cycle on the 28th of February. So that's where the exact 60 days is. But obviously we've got a lot of wriggle room of 10 to 15 days either side. So we're well within the realms of this cycle ending anytime soon. And what we know with these cycles is that usually the cycles come to an end with a flurry to the downside, which ends the cycle, which is these red lines here, before the start of a new cycle. So we always start at the bottom for a new cycle. And the question is this going to be the bottom over here and find support on the green line? Because as we're going into this final phase of the 60-day cycle, i.e. we're in the last 11 days of the current 60-day cycle, so you would expect at this point somewhere along the line between where we are to the end of the cycle to have some sort of a flurry to the downside, which would obviously break the green line and therefore invalidate the pattern that we've just had a look at the beginning of this video. But the cycle would suggest that this is what it's going to do. So we really don't know which one's going to play out. But as I said before, on a balance of probabilities, you would expect the green line to hold because this is a much more longer trend and a pattern that's developed over the last 15 years. And the 60-day cycle is obviously a much shorter term time frame pattern. And when we read the candles here, they're also giving us a story which I want to relay to you. And that is that, firstly, that we made the last high here before the midpoint. And since then, we haven't made a higher high from that point, which means that this is now a left translated cycle. And previously, as I mentioned before, the last two cycles were the right translated cycles. So we were in a way due for a left translated cycle, which we've got here. And we did have a move all the way down to the long-legged candle here, which came out on the 5th of December. And as soon as this hit, I was giving you some insight into the meanings of this long-legged candle, that this is more than likely going to set the tone for the higher range and the lower range. And this is what was probably going to happen with a consolidation after this big 120% move. So this candle's played out very, very well. And what we've now got is that having had the consolidation, we are expecting some sort of a move above the 109,000 to break up. And this particular green hammer candle here, what we saw with the characteristics of that was it was trying to put in a bottom right at the bottom of that trend around 91,000. Now, if it wanted to go much lower than that, and of course it can still do that, but the characteristics of the pattern that's developed here would suggest otherwise, in the sense that we had the opportunity to break this particular support here many times in the last few weeks, and it's not taken that opportunity. And this was the last opportunity it had. And what it did was it was bought up very aggressively to the point where we actually closed with a hammer candle, which is obviously very bullish. And this green hammer candle hasn't actually played out because we haven't yet protruded above that high of that candle. And so far we are running down on the wick of this candle. So far we've come to around about 94,000. Which is about 2/3 of the way down that wick. And the characteristics of these types of candles is that it's unlikely to go below that low of that wick. So even though we would expect at the end of a 60-day cycle for a flurry to lower levels, even the way the candles have actually formed here would suggest that we may well find good support on the green line, and that on the balance of probabilities, even in the cycles, this may be a low probability. And what we've really seen over the last 2 weeks is that we've got this bullish candle here, which has been followed by 2 gravestone doji candles, which in the middle of a trend do not have much importance, and which have been closing virtually at the same price all the way through for the last 12-13 days at around about the 96,000. And in some ways these 2 candles have played out to the downside by taking it down to these levels at around about 94,000. So we are waiting for this green candle to play out to the upside. We've got a lot of indecision in the market. We've got the green line support of the pi cycle. So the possibility that this candle here becomes the end of the cycle is quite possible. It's on the cards. It's not the way normally a 60-day cycle would end, but we would want to see it go above the 102,000 to give a confirmation that we have started a new cycle there. So just a few insights to regards to what the candlestick and the price action pattern is telling us. So the short term really is all about a possibility that this can go down. The probability seems to be that we're going to find support on the green line, but certainly if it does fall below the green line, I wouldn't expect it to go below this support line here, because this is where we found support on numerous occasions where it had an opportunity to go much further down, but each time it's been bought up very aggressively. So you would expect with a higher probability for this to be the low of this particular cycle if it does make it down there. But the higher probability seems to be to find support on the green line. But the higher probability is to find support on the green line and for the start of the new 60-day cycle. This is where I would expect a retest of the 109,000. As we're getting deeper into the final phase of the bull market, there's a greater likelihood for us to retest that. If we'd have been going into the final phase at around these levels, then this would have been even more likely to actually break up, because at the moment we're more in the middle phase. There's obviously more room for it to go up here, therefore more chances for the bulls to lose steam around here. But you can still do this depending on how much demand there's going to be. So let's wait and see what happens. Only time will tell. But we're really on the cusp of trying to break through the 109,000 to the next levels. And as I showed you with the Fibonacci retracement last week, that our targets in the near term over the coming months, not just a few days or weeks, but in the next few months, these are our targets. This was our first target here at 104,000, which was based on the 1.272 Fibonacci level. And the next target is around about the 130,000, which is this red line here. And then the 175,000. So once we get this break above the 109, then expect some sort of a move very quickly to the 130 or the 175, where you would expect some sort of a consolidation or a pullback at both of those levels here. And finally, looking at the current cycle in the eyes of this yellow parabola that you see on my default chart, we've got one support here, 2, several supports there. So this would suggest that we're not going to be breaking down below the yellow line here until we get to the end of the bull market. And currently on this week's candle, this is a weekly time frame, on this week's candle, the bottom of that is at around about the 82,000. So unless the price collapses this week, the chances are, if it is going to move towards the yellow line, it's going to take several weeks. So it'll be around about the 90,000 if it wants to interact with that yellow line. Otherwise, we should be expecting a move to the upside in the next 60-day cycle. Okay, so I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. And if you've got any comments, then please leave them in the comments below. The markets are closed today because of President's Day in the USA. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.